In today's video, we're going to take a look at Omega Healthcare Investors, ticker symbol OHI. This is the 21st video that's a part of my portfolio series where I'm doing an in-depth analysis on all 32 stocks currently in my own portfolio. If you're new to my channel, my primary focus is on income investing and also dividend growth investing with holdings that offer at least a 4% yield. As I've said in every video in this series, this isn't done in any particular order, so just because this video is 21st in this series does not mean that this is my 21st favorite stock or my 21st largest holding. Also note that because I own all these holdings, I am biased towards them, so do your own research before making any investment decision for yourself. Also, let me know if there's any improvements to this series that I can make going forward. Feel free to check out last week's video, which was on the Amplify CWP Enhanced Dividend Income ETF, ticker symbol DIVO, which is a covered call fund that was designed to give investors a safer, high monthly dividend. Going into my Vanguard account, which is where I do all my dividend investing, as of the making of this video, I currently own 125.205 shares of OHI. Their stock pays quarterly dividends, with their last being for 67 cents per share. With the number of shares that I own of this stock, I receive roughly $83.88 every quarter, or divided by 3, which is what I like to do, that comes out to roughly $27.96 a month from this stock. Omega Healthcare Investors is a real estate investment trust that provides financing and capital to the long-term healthcare industry, with a particular focus on skilled nursing facilities and assisted living facilities across the US and the UK. Through the use of their triple net lease structure, Omega's goal is to provide strong returns to their investors while serving as the preferred capital provider to their operators so that they can concentrate on providing a high level of care to their residents. Founded in 1992, the company utilizes long-term triple net leases and fixed-rate mortgage loans with their healthcare operators. There's been a good amount of drama surrounding this company over the last 3.5 years. Just like with most stocks, OHI took a nosedive back in March of 2020 because of the pandemic. But unlike most stocks that eventually recovered, Omega Healthcare has been facing a serious crisis that they're still battling to this day. Because of COVID, some of the nursing and assisted living homes owned by Omega were unable to pay rent due to several reasons, including falling occupancy ratings. Additionally, many of these properties could not operate at full capacity due to their inability to find enough workers to fill caretaker positions. With the pandemic reported to be making another wave, it's a concern that's been on a lot of investors' minds. If we start at the beginning, OHI took a hard tumble in the late 90s, but eventually leveled out in 2001. Between 2001 and 2020, Omega saw its share price grow by over 2,600% along with a good amount of dividend increases. But then COVID happened in 2020 and it caused a significant amount of difficulties for this company. In January of this year, the company announced that their dividend payout ratio was going to be stretched due to restructuring their agreements with some of their tenants who were still struggling to pay rent. All the while, the dividend yield for OHI was hovering around 8% on the low end and sometimes exceeding 10% on the high end. At one point, their dividend payout ratio was exceeding 100%, meaning that they were paying more in dividends than they were actually making, which is a huge red flag for any dividend stock. Fortunately for Omega, in recent quarters, things have been going in the right direction for them. Last August, they released their third quarter results, and their payout ratio went from a high of 112% down to 90.5%. Taylor Pickett, the company's CEO, said on one of their earnings calls that they expected their dividend payout ratio will rapidly improve in the months ahead, and they're expecting it to level out in 2024 into the high 80s to low 90s. So far, things have been working out for them, and as a result, their stock is up considerably this year compared to other REITs. OHI is currently up almost 17% for the year, while most REITs are either flatlining or down for the year. As investor confidence continues to grow for this company, the case for investing in nursing homes is still really good. Skilled nursing facilities, or SNFs, fulfill an essential need within the healthcare sector, and aging US demographics show a strong likelihood that the need for these kind of facilities is only going to grow for a long time. Currently, 75% of Omega's properties are SNFs, and the remainder are nursing homes. There's a few differences between SNFs and a nursing home. You can see they have this slide in their latest investor presentation that shows the differences between SNFs and other types of similar properties, including independent living, assisted living, and long-term care hospitals. Skilled nursing facilities are different from nursing homes in that they usually have at least one doctor and a handful of nurses who are on site caring for the residents. Residents at SNFs can either be long-term or short-term, although the average stay at an SNF depends on if they're being covered by Medicare or Medicaid. For patients with Medicaid, the average stay is 18 months and costs roughly $250 per day. For those with Medicare, the average stay is between 20 and 25 days and has a much higher cost compared to Medicaid. More patients are discharged to skilled nursing facilities than to any other type of facility, and there's a handful of reasons why. The average cost per day for an SNF is significantly lower than the alternatives, including inpatient rehab facilities and long-term acute care hospitals. SNFs provide people with around-the-clock care that they need without having to pay significantly more than other options. So this is why doctors prefer sending patients to these kind of properties that Omega Healthcare invests in. What also works for this REIT's benefit is that this industry has a lot of regulatory restrictions, meaning that it's difficult for competitors to enter this field. Despite the aging US population, the number of nursing facilities has not been growing to meet the demand for these kind of services. In the next 20 years, the number of Americans living past the age of 65 is expected to grow by 44%. By 2040, an estimated 80.8 million Americans will be over the age of 65 and make up roughly 22% of the population. In 2020, they made up about 17% of the US population. For those over the age of 75, the likelihood of a patient being discharged to an SNF increases significantly. It's an unfortunate situation that these facilities are going to be needed. No matter what happens, not everyone who suffers a serious health crisis is going to be able to be discharged to their homes or to a hospice. There will always be a need for places for people to receive around-the-clock care. As of May of 2023, this REIT owns 902 properties across the US and the UK, and they have 89,828 beds available in these facilities. These properties are owned and operated by 66 different operators. They have over $9.9 billion in total real estate investments, and they have a combined enterprise value of $11.9 billion. Here in the US, their properties are spread out across 46 different states, with Florida, Texas, and Indiana being their top states. Omega's been expanding more into the UK over time, as they currently have a little over 100 locations in the United Kingdom, and according to Omega's website, no single operator makes up more than 10% of their total revenue. In addition to skilled nursing facilities, Omega also owns properties for the more traditional independent living retirement homes and specialty hospitals. They also own buildings for traumatic brain injury centers. These are really specialized centers for people who have suffered strokes or serious brain injuries who need specialized care and rehabilitation. Omega has long-term leases with their tenants, with a third of them not expiring until after 2032. They have an average lease term of 9.4 years, which is pretty good. The longer the average lease term, the better it usually is at predicting future cash flow. In the end, Omega Healthcare is a company that's still going through a period of uncertainty despite things improving for them. Although in their most recent quarter they were able to fully cover their dividend, we'll have to wait and see if they can still keep their payout ratio this low. The company's CEO continues to sound really optimistic about their future, although as of the making of this video, it said that COVID is making a comeback. It's my opinion that this won't be as serious as what we've already been through though. Ultimately, what I like about Omega is that they invest in properties that are essential. No matter what advancements take place, the kinds of properties that this company holds will always be needed. Unless they find a cure for aging, there will always be people who will need a place to receive around-the-clock medical care that's not available at home. Omega has the potential to expand further as they currently own only 5% of all SNFs in the United States. They claim they're aiming to double in size in the next 10 years, but considering the effects of the pandemic, I doubt they'll be able to expand this quickly. It's also estimated that by 2030, all SNFs will be at full capacity, which again will benefit this company. I think Omega is currently in a better position than Medical Properties Trust, who just recently went through a dividend cut. As I mentioned in a previous video, I did have concerns about how many shares I owned of OHI, as I used to buy this stock really aggressively. Fortunately, things have worked out for me up to this point, but I'd caution people who are really risk-averse before considering this investment. When you see an equity REIT yielding over 8%, you should know that this is much higher than average for this kind of holding and should be viewed as being a riskier investment. I can't guarantee this company will make it out of their current struggles, but things are moving in the right direction for this company. But with that being said, that's going to conclude our look at Omega Healthcare. If you're interested, feel free to check out my Patreon, where you'll find an Excel sheet of all of my holdings updated monthly. You'll also have the option of reading this analysis as well as every other analysis that I do in this series. Plus, it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.